All I know is at some point when
All right. All right. So I want to, on behalf of all the chambers here, want to welcome everyone who has joined us today. We're glad to be able to kind of do this as a joint effort with our partners at the U.S. Chamber of Commerce get some updates on the PPP program, the EIDL program, maybe even a quick little, Jennings might have even a little bit having to do with what the Treasury's come out with this morning too. But we want to welcome everyone. Just so everyone knows, everyone's been muted. You guys can see us, we can't see you. So if you're in your pajamas, you're fine. If you guys have questions, down at the bottom, you'll see on your screen there's the chat box, and then there's the Q&A. So go ahead and make sure you include your questions within there, and we'll try to make sure to get to as many as possible. If we don't get to your questions, we'll get all of this information and gather it together and make sure we get those questions answered for you as effectively as we possibly can. So you're gonna see the information from Jennings here in just a minute, and I'm gonna turn it over to him in just a second. And also, if you have a chance, if you have a cell phone, and if you're watching this on your cell phone, keep your cell phone sound on, because then otherwise that would be very difficult to not hear this and just see it. But if you have your cell phone next to you, I encourage you to just turn it off and focus in on this, because this is going to be a lot of information in a short period of time. We want to make sure that you take as much of this with you as you can. So I'm going to now turn it over to Jennings Imel. Jennings is with the U.S. Chamber of Commerce. We've worked with Jennings for quite a few years now in our area, and we're glad to work with him. And for those of you who attended our Southwest California Legislative Council meetings, you've seen him over the last few years doing some updates from the U.S. Chamber. So we're glad to be able to host you today, Jennings. And so I'm going to turn it over to you and kind of let you off this presentation, and then we'll kind of bring it back at the end and do some Q&A.
Great. Sounds good. Thanks, Patrick. And, thanks to Kim and Emily and Brooke and Tony, for having me today and putting this together. Give some more information about the CARES Act, go over some of the programs that are in there specifically for small business. I think that is the most relevant information for the folks that are on the call. I'm sure that a lot of the people that are on the call have already attempted to apply or have submitted their applications for the SBA's EIDL loan. That's the Economic Injury Disaster Loan, or the PPP, the Paycheck Protection Program. Those are really the two biggest kind of loan programs that are out there for small businesses to take advantage of. So I'm sure a lot of you already have kind of an intimate experience of dealing with this this setup and this application process for these two programs. But happy to talk a little bit more about that and about the bill itself, and just kind of give an overview of where the bill came from and how it all came together, just to kind of set the stage a little bit and provide some context. This is a huge undertaking. It was a $2.2 trillion package. It's the largest package Congress has ever passed. 10% of the country's GDP, and it was put together in less than 2 weeks. So really at a rapid pace that we just quite frankly never see with Congress. And it's a 900-page bill. So given the fact that it was put together so quickly, it's 900 pages. There's a lot to digest in this bill, and so there's been some confusion, of course, that's been a result of this. We've had to see various rounds of guidance and regulations come from the Department of Treasury and from the SBA, so that businesses have a better idea of how this program and how the various programs in the bill are going to work, but then also so that banks have a better idea of how this is going to work. We didn't see guidance come out, for example, on the PPP program until Thursday night, just a couple of hours before banks were supposed to start accepting applications for the PPP program. So there was a lot of confusion there. Banks have been very much overwhelmed with the volume of applications that they've received. And the same could be said for the SBA. The SBA, their EIDL program, even though that's a pre-existing program, it's been around for years, and that's something that businesses have been able to take advantage of if they were suffering from a natural disaster. Even still, the SBA didn't have the bandwidth to be able to accept, this kind of rush of applications. When you look at, the total amount of money that the SBA usually lends through that program in a given year, it's a minute fraction of the amount of money that they're going to be lending now in response to the COVID-19 crisis. So a lot of adjusting there. We've heard of, really long lag times and delays for folks that have submitted their applications and haven't heard back from SBA, or that have been working with their lenders and haven't really, either received word back or have had difficulty even working with their lenders, especially if they didn't have necessarily a lending relationship. Even if they just had an account with that bank, if they didn't have the lending relationship, then they were having difficulties. So we've heard a lot of these problems. I think that they're going to start to get better over the coming days and weeks. It's just going to take time. I know that the banks are working as hard as they can to get up to speed and get caught up, but the volume of applications here and just what we've seen over the weekend. I mean, this thing rolled out on Friday, April 3rd. The volume was really just unbelievable. And that's led to a conversation now in Washington, D.C. of, well, now we have to look at, infusing additional cash into the PPP program. The thinking was that the PPP program at $350 billion was going to be sufficient because that's about half of all the payroll costs of every single small business in America for an entire quarter. So the thinking was 350 billion, we wouldn't run out of that. But if you look at the numbers over the weekend and even today, it looks like that might in fact be the case. So Congress is going to have to get to work on this. And I could talk a little bit more about that kind of towards the end of our call and where things stand with, adding to that program and then potentially doing a phase 4 bill that addresses even more outstanding issues. But I just want really everybody to understand the scope, how huge this bill was and everything that's involved in it. And then also the intent of Congress in doing this. So there are two really main underlying objectives here. And those are to immediately increase liquidity into the system, understanding that we have a liquidity problem and crisis for small businesses. So we need to get money out into the system as quickly as possible. So that's what the bill aims to do. And then the other issue is how do we keep folks on payroll and keep employees tied to their employers? So those are the two underlying objectives that Congress set out, and that was the intent of the bill. That being said, $2.2 trillion is the numbers that we're talking about. It's very difficult. It's like putting out, as I've heard many times, I'm sure some of you have heard it too, putting out a fire with a water hose, because there's so much money that needs to be, it's essentially the largest redistribution of wealth, right, that we've seen, that needs to be pumped into the system, and just trying to allow kind of the levers to allow that to happen. That's been kind of a struggle for us. But just to understand that that's the intent of the bill, is to get money out there, make it as available as possible for people to take advantage of, and then also to keep people on payroll so that when we get out of this crisis in a couple of weeks or a month, however long it takes, that we can get back up and rolling as soon as possible and have a seamless transition. So that kind of sets the stage for the bill and what Congress was thinking. I'll share my screen now. I have a slide deck that I can go over on the Federal CARES Act. I'll talk about some of the things that are in it, some of the major provisions I think that'll be useful to know, and then of course focus most heavily on the PPP and the EIDL programs. So first of all, of course, the automatic payments, expect to receive those by as early as next week. So those should be going into your bank accounts, and that'll be based off of the most recent information that IRS has for you. It's $1,200 per individual for folks making up to $75,000 a year, $2,400 for joint filers making up to $150,000 a year, and there's also an additional $500 per child that folks can be receiving. If you're used to getting your checks, your refund checks in the mail, then I probably expect to receive this at the end of April. But those should be coming relatively soon. Expanded unemployment, of course, is a big part of this. It expands unemployment eligibility for folks specifically related to COVID-19. So if you've been laid off or furloughed due to COVID-19, or your business has been deemed non-essential and you've are out of work, then you can apply for unemployment through your state UI office, and then be eligible to receive some of the enhanced unemployment benefits that were part of the CARES Act. So some of the benefits, the enhanced benefits, are that it extends unemployment from 26 weeks to 39 weeks. And then you also get an additional $600 per week on top of the regular state benefit. And that is retroactive as well to January 27th. So if you were laid off in February or early March due to COVID-19, you could still collect that extra $600 a week retroactively going back to when you were laid off. And that benefit runs out on July 31st. Overall, the expanded UI program, it runs through the end of the year. Eligibility, of course, will end when an individual can return to work. So I know that there's been some concern about that, about, if you're getting the extra $600 per week, that you might actually end up, if you're an employee, making more money on UI than you would as an employee. Well, as soon as the employer offers you your job back, if you reject that offer, then you're no longer eligible to receive UI. So that's important to note. And then, of course, this is all done through your state unemployment insurance office, so you'd have to apply through there. Some of the major provisions I'll talk about will be on the tax side of things, tax changes, the employee retention credit that apply to businesses of all sizes, small, medium, and large. And then I'll focus, like I said, most heavily on the PPP and the EIDL programs. For all employers, there are a couple of big changes here and opportunities to take advantage of. On the payroll tax side, you have the possibility to defer payroll taxes. That's the 6.2% payroll tax and Social Security. You can defer that between now and the end of the year. And if you choose to exercise that option, then 50% of the amount that you've deferred would be due at the end of 2021, and 50% would be due at the end of 2022. So over the next 2 years, you'd have to pay that money back. But once again, this is aimed at improving liquidity immediately for small businesses. Now, this does not apply, however, if you are having your loan forgiven under the PPP. So if you have a PPP loan and you're receiving forgiveness, then you are not eligible to defer your payroll taxes. Other tax changes: net operating losses now can be carried back for 5 years and used against previous taxes paid. You have the election to increase limit on interest deductibility from 30% to 50%. And then a big one too is the fixed to qualified improvement property. And that's particularly big for a lot of folks in retail and restaurants that have made improvements to their property. And after the 2017 tax bill found out that they were not eligible to deduct those expenses immediately, which was kind of a disappointment and really was due to an error in the drafting of that bill. Well, that error has been fixed, and now you have 100% bonus depreciation deductibility for QIP, qualified improvement property. So any improvements that you've made to your property over the last couple of years. The employee retention credit is another big item, I think, that was in here that kind of has gone under the radar somewhat because it was added to the CARES Act at the last minute. This is once again open to employers of all size. And it pertains to employers that have been fully or partially shut down due to COVID-19 or have seen a 50% drop in gross receipts in a quarter compared to the quarter of the previous year. They would be eligible to get this credit, and then they would maintain their eligibility until their gross receipts go back up to 80% of what they were compared to the year before at the same quarter. The refundable tax credit is for 50% of the wages, and that includes employer health plan expenses as well by the employer, and up to 10. So it caps out at $10,000 per employee, which is essentially a fancy way of saying that an employer could get a $5,000 tax credit per employee that they could use to keep employees on the books. Now, there are 2 sets of rules, however, for this program, depending on the size of the employer. For an employer with more than 100 employees, this tax credit only applies to employees that are not currently providing a service. So these are employees that are on the payroll, but are not actually in the workplace, not providing a service for your business. You just wanted to keep them on the payroll. You'll be able to get access to this $5,000 tax credit. Now, for employers with less than 100 employees, this tax credit would apply to all of your employees. So just something to keep in mind. However, like the deferral of payroll taxes, if you receive forgiveness through the PPP program on a loan, then you are not eligible to take advantage of the employee retention tax credit. And then I know that Treasury has been working on ways that they can advance the payment of the credit as well, so businesses don't have to wait to receive that money. Really briefly on mid and large employers, this was a big part of the bill. Of course, $500 billion was devoted to businesses that are kind of medium sized, large businesses, as well as specifically for the airline industry, cargo, national security industries, and then also state, county governments were included in this pot of money as well. So about $50 billion is already part of the airline program that has been rolled out. We've seen some information on Treasury on that last week. However, we're still waiting for more guidance and information on exactly how various credit facilities are going to be rolled out for mid-sized and larger employers. A lot of news, I think, as Patrick alluded to earlier in the call, on kind of what the Fed has been doing and allowing for an additional $2.3 trillion worth of lending for those medium-sized and larger businesses. There's going to be, I think it's 9 different credit facilities that are going to be set up to provide funds for these various businesses and industries. And I think that's what we're still waiting to see a little bit more information on. So quite frankly, this is the part of the bill that we have the least amount of information. But I think that over the next probably even couple of hours and 24 hours, we'll probably see more information on exactly how that's going to be rolled out. So keep an eye on that. I think the biggest thing for us is kind of looking at how the Main Street lending facility is going to be rolled out. And that's for the medium-sized employers between 500 and 10,000 employees. That makes up a big part of the economy. So we'll be eager to see kind of what some of the rules are and how that's going to be rolled out. Now, more specifically for, I think what's most relevant to the people that are on this call is the Paycheck Protection Program. And then after this, I'll talk a little bit about the EIDL program as well. These are the 2 programs that have been designed specifically for small businesses and for them to keep folks on the payroll and kind of help them weather the storm for the next couple of weeks and get through this crisis. So the PPP program is a brand new program. It's $350 billion worth in loans for small businesses. So that's businesses that employ less than 500 employees. It's also open to nonprofits, but only 501c3 nonprofits. And then a couple of veterans and tribal organizations as well are eligible for the PPP, but 501c4s, 501c6s, chambers of commerce, of course, are not eligible for the PPP program. Although that's something that I could talk about later, and certainly something that we're going to try to address in a phase 4 package. Self-employed, sole proprietors, independent contractors, also eligible to apply for the PPP program. Also worth noting that businesses that are NAICS code 72 and above, so that's businesses that are in hospitality or in food service, number of franchises, they are eligible for the PPP program, even if they have more than 500 employees, so long as they have less than 500 employees on a per location basis. They can also apply for the PPP program. So the loan amount that you can get, the maximum loan, will be determined by looking at your payroll costs. Because this program is specifically geared for payroll purposes and keeping folks on payroll, that's why the loan amount is kind of determined by what your payroll costs are. So the maximum amount is 2.5 months of your average payroll or $10 million, whichever is less. And the way that you would go about calculating your average payroll is you would look at, you have 2 different options actually. And it depends on the bank, because this is something that's come up on a bank by bank basis. But you would look at either the previous 12 months, so going back to April 2019, take all your payroll costs over those 12 months, divide by 12, and that would get you your average monthly payroll. Or you could look at the 2019 calendar year. So we've heard of banks kind of asking for one or the other, and so just kind of keep that in mind. When you're calculating your payroll costs, that includes things like health insurance benefits, retirement benefits that you're providing, sick leave, PTO, commissions, tips, And then also state and local taxes. So the state tax on unemployment, for example, not the federal tax, the state tax on unemployment, for example, would be part of your payroll tax. Also, something to keep in mind is that for employees that are making over $100,000 a year, they're going to be capped at $100,000 when calculating their compensation and your average payroll. So if you have employees that are making, for example, $150,000, you'll have to deduct $50,000 from the calculation of your average payroll costs. So keep that in mind when doing that. So it's essentially taking that average monthly payroll multiplied by 2.5, and that gets you your maximum loan amount, either that or $10 million, whichever is less. The loans can be used, or the loans will be made by local and national lenders, of course. So this is SBA approved lenders, SBA 7A program approved lenders, which there were several hundred nationwide before this crisis happened. And I know that the SBA has worked very hard with banks and credit unions really across the country to make sure that we have just about every FDIC insured bank eligible to participate in this program. So that hopefully is the case, and hopefully most of the local banks and community banks and credit unions in your area are capable of participating. There are going to be minimal requirements, no collateral, no personal guarantee. Outside credit availability is also waived. That's been kind of an issue with previous SBA programs. If you had access to outside credit, that would preclude you from being eligible. That's not the case here. So very minimal underwriting. And then, of course, the unique thing about this program is that it converts into a grant if used on payroll, rent, interest on the mortgage, utilities. And the way that you calculate the amount that you're eligible to have forgiven is it's 8 weeks after the origination of the loan. So you look at the amount of money that you've spent on payroll and those other things like rent, interest on mortgage, and utilities for the first 8 weeks after the origination of the loan. And that's the amount that you'd be able to have forgiven. So it is different from the maximum amount that you can take out. So there's two different calculations that have to take place here when kind of determining what the loan amount is going to be and then what you're capable of having forgiven. So the loan amount, of course, 2.5 times average monthly payroll. The amount forgiven is 8 weeks of payroll, rent, interest on mortgage, utilities. The final guidance that came out last week on Thursday specified that during that 8-week period, the amount of loan forgiveness, 75% of that amount needs to be spent on payroll, and then the other 25% would be spent on those other things that I mentioned, like rent, interest on the mortgage, and utilities. So just keep that in mind. So there will be cases where businesses, might not have anything left over. They might have their entire loan forgiven, and there will be cases where businesses will have money left over. They're not going to have everything forgiven. It'll just be those 8 weeks, and they might have something left. If that's the case, there are terms for that loan that apply. It'll be, there's a 1% interest rate and amortized over 2 years. And then payments will be deferred for up to 6 months. However, interest does accrue during that 6-month period. So those are the terms that are existing for the PPP loan. The part that doesn't get forgiven, just keep that in mind. It'll be 1% interest rate over 2 years and deferred payments for 6 months. And there's no penalty to prepay as well. If you want to pay beforehand, there's no penalty if you decide to do so. Keep in mind as well that loan forgiveness is reduced proportionally if the employer reduces the number of full-time equivalents or if the employer reduces wages by more than 25%. Because after all, the intent of Congress, the intent of this program is to keep people on payroll and to keep people paid and kind of maintain things as they were pre-COVID-19. And so that's why you have those provisions in there. So if you're an employer and you're planning to get this loan and you want this loan to be forgiven or the maximum amount possible to be forgiven, just keep in mind that you're going to want to retain your staff and you're going to want to retain their wages as well. Now, we understand that there are a number of employers that already laid off folks or furloughed folks beforehand, before they were able to get access to this loan or before this program was even created. So if you did that, if you laid people off or if you cut wages, between February 15th and April 26th. That's 30 days after the enactment of the CARES Act. If you did that, that's okay. You just have to bring those folks back on the payroll and then restore their wages at least 75% of what they were on February 15th. You have to do that before June 30th, 2020. If you do that before June 30th, then your loan forgiveness will not be impacted. So you can learn more about the Paycheck Protection Program through our website, uschamber.com. If you go to uschamber.com/SB loans, that's where our 4-pager is on the PPP program. It'll provide you with more information and give you things to think about regarding your eligibility and how to apply. I think that that's been a very useful tool that other chambers have used. As a matter of fact, it's something that the SBA uses itself, I've seen. So that's been good. We have other guides as well. We're in the process of putting together a guide specifically for self-employed and independent contractors, because self-employed and independent contractors can apply for a PPP, and they will be able to do so starting tomorrow. So the PPP was only open to small businesses on April 3rd, and now April 10th, tomorrow, is when the program will open to those independent contractors and self-employed. So we are going to put together another guide specifically geared for them. And then we have additional guides on the EIDL program, on the employee tax retention credit, payroll tax deferment. And so we encourage you to go to our website and check out those resources. And then also keep track of what's going on the Treasury's website. So if you go to treasury.gov/cares, you can get all kinds of information for borrowers and lenders. That's where you'll be able to access the PPP application itself. And you'll need to fill out that application. It's only about 2 pages long. You'll fill that out and you would take that to your lender. And then your lender might also require that you bring additional payroll documents as well, just to verify what your payroll costs are and things like that. But you definitely need that PPP application, which you can find on Treasury's website at treasury.gov/cares. And then lastly, as it pertains to the CARES Act, the SBA's EIDL program is another opportunity that's out there for small businesses to take advantage of. This is a program that's been in existence, as I mentioned, for a long time. So there's not as much new stuff necessarily with this. However, just the volume has been kind of overwhelming for the SBA, so they've had difficulty keeping up. But what the CARES Act also did was it really kind of put this program on steroids. And it is another option. It's different from the PPP in a number of ways. So as you're thinking as a business as to what program makes the most sense for you, it's kind of important to consider the PPP and the EIDL and understand the differences and the costs as well that both programs cover. So the EIDL program is open to small businesses, 500 employees or less, and then also nonprofits, and that includes 501c4s, 501c6s. So it's beyond just 501c3s, so that's an important distinction. Sole proprietors, independent contractors, also eligible to apply for the EIDL loan. You can get up to $2 million in working capital for up to 30-year term. It has a fixed interest rate of 3.75% for small businesses and 2.75% for nonprofits. Now, it's important to make the distinction here between what you can use the EIDL loan for and what you can use a PPP for. So the PPP, it has to be used on payroll, rent, interest on mortgage, utilities. EIDL loan could be used for those things as well, but it can also be used for increased costs due to supply chain disruption or paying various obligations and debt that you have that you're not able to meet because of a loss of revenue. So you can use the EIDL loan for other things like that, for example. So something to keep in mind when you're thinking about which one makes the most sense for you, and especially if you're a business where you don't have necessarily high payroll costs, but high costs elsewhere, high capital costs elsewhere, you might want to think about the EIDL loan as an alternative, because the maximum amount that you'd be eligible for with the PPP would be determined by your payroll costs. So just something that I recommend just thinking about. For the EIDL loan, you can defer payments for up to 1 year. Loans are based off of your credit scores, no tax returns required. Kind of the underwriting here has also been eased substantially. You can get up to $200,000 without a personal guarantee. and no collateral for up to $25,000. And then another kind of unique feature of this program that was added as part of the CARES Act is the $10,000 emergency grant. So it's a grant, you don't have to pay it back. You can get that upfront. It's a cash advance that you're supposed to get within 3 days, and it's up to $10,000. So if you apply for it, doesn't mean you're necessarily going to get $10,000, but you get up to $10,000, and you can get that money even if your application for the EIDL loan is denied. So keep that in mind. However, I will say, just in doing a number of these webinars, I've yet to talk to a single person that has actually received this $10,000 emergency grant. Even if they applied a week ago or whatever, they haven't heard anything back. So the most recent information that I've seen on this, and I'm not sure because information seems to be different depending on who you're talking to at the SBA and what region it is. But what I've seen is that $10,000 will be received within 3 days of you as an applicant receiving an email from SBA, like a confirmation email that they have received and approved your application. So I've heard that that's the case because certainly people are not receiving it within 3 days of filling out the application initially. So we'll see, but we've kind of been in contact with SBA on that, and hopefully they'll be able to get that money out there quicker and just to be able to process the loan applications in general quicker. But that is available for folks to take advantage of. Also interesting or important to note how the EIDL program interacts with the PPP. You can have both, you can apply for both, but you cannot use the money on the same thing. So the PPP, like I said, is specifically for payroll, other overhead costs like rent, interest on mortgage, utilities. You have to use it for that. If you have that and you have the EIDL, then the EIDL would need to be used for those other expenses that are not covered by the PPP. If you already have an EIDL loan, if you've already been able to secure that by some luck, and you're using that, however, for payroll costs, utilities, things like that, then you could also still apply for the PPP, but the only kind of use that you'd have there, and the only way that the PPP would apply to you is you just roll over your EIDL loan into a PPP loan. So that's just kind of a way of refinancing so that you could take advantage of the potential forgiveness of the loan. So that's something as well that's out there that people can take advantage of. The way that you'd apply for this, it's very different from the PPP, whereas the PPP, you go directly through your lender. The EIDL loan, you go through sba.gov. If you go to sba.gov/disaster, you'll be able to find more information on the loan program, as well as the application that you can fill out and then submit that, and then you would hear back directly from the SBA. Like I said, the timing on when you hear back, I don't know. I remember seeing something last week that the timing was between 14 and 21 days. Hopefully that's improved over the last couple of days. But like I said, SBA has been very overwhelmed by the sheer volume of applications they've received. And then of course we have at the US Chamber, our guide on the EIDL program linked at the bottom of this slide. And then you can find more information at uschamber.com as well on the EIDL program, PPP, all of that. I could end it there. I don't know if, and it's because this is kind of a conversation on the CARES Act, that's the main stuff I wanted to cover. I could also talk about the paycheck protection or the Families First bill that was passed in mid-March if there's interest. I guess I might as well just cover that really quickly. That was the phase 2 bill that was passed on sick leave, FMLA leave. I know there have been some questions on this, some confusion on it, but just so everybody is aware, this does apply to all employers with less than 500 employees, and it went into effect on April 1st. So for those small businesses, they will be required to provide 10 days of paid sick leave if the leave is related to COVID-19. So the leave has to be taken by the employee due to COVID-19. So if they're ill, if they've been quarantined, if they're under self-quarantined or been advised by their physician to self-quarantine, if they're taking care of a quarantined family member, if they're taking care of a child because their school's been closed or their daycare is closed, then they would qualify for the 10 days of the paid sick leave. And the leave would be paid at the regular rate of pay with a maximum of $511 per day and about $5,100 in the aggregate. And then if you're taking care of a family member, then you would receive 2/3 the rate of pay with a maximum of $200 per day. Now, this payment would be reimbursed by the federal government. So as an employer, you would receive a 100% tax credit. And there is, I believe, an option if you go to the IRS's website where you can apply directly to the IRS to get an advance on that tax credit. And then businesses with less than 50 employees may be exempt from providing the leave, but only to employees that are taking care of a child. So this applies only to their employees taking care of children due to COVID-19 closures. If they can prove that providing that leave threatens the viability of their business. So there is that exemption potentially out there for the very small businesses. Paid sick leave, of course, is not available if the employee can telework. Very similar on the FMLA leave. So after you've exhausted the 10 weeks or the 10 days of paid sick leave, then there's also now an FMLA leave requirement of 10 weeks. Once again, for small businesses, and this is once again applicable only to folks that are needing to take leave due to COVID-19, to take care of a child, family member that due to school closure, things like that. They would be able to take advantage of this program. Leave would be paid at 2/3 of the regular rate at a maximum of $200 per day and $10,000 in the aggregate. Just like the sick leave, the FMLA leave, this is on top of whatever the employer already provides, and also on top and in addition to whatever is already mandated by the state. So keep that in mind. So this is an added level of sick leave and FMLA leave. The payments will be reimbursed at 100% through a tax credit by the federal government, just like with the sick leave. And then similarly, if you're a small business with less than 50 employees and you can prove that this threatens the viability of your business, you may be exempt from providing that leave. And then for FMLA leave, of course, just like sick leave, it's not applicable if the employee can telework. So just wanted to cover that very briefly because that's already a program that's in effect right now, and we've received some questions on it. So that's the Families First Act, CARES Act I discussed earlier. And then, we'll see what happens as far as the PPP program being bolstered and what phase 4 looks like. The Senate attempted to add an additional, or to add $250 billion into the PPP program this morning. They wanted to vote on that in the Senate through unanimous consent, which means all 100 senators would approve. They wouldn't have to go to DC for a vote. Unfortunately, that did not happen. Majority Leader McConnell really wanted to do just a straight $250 billion cash infusion, whereas Democrats on the Senate side and then Speaker Pelosi were kind of insisting that additional money be added for hospitals and for states and county governments, and also to make sure that minority-owned, women-owned, veteran-owned businesses also received a certain amount of money, or were received more, or got kind of a guarantee that they were going to get access to additional money in the PPP. There were also some other issues that were involved there as well. So that ultimately didn't happen, but I think that the PPP running out of money is kind of the most pressing and immediate issue right now. Just looking at the volume of applications and the amount of money that's already been originated and kind of in the line and in the pipeline, there is a very real chance that the PPP could run out of money. And so Congress is going to have to address that. And then, when we're talking about a broader phase 4 package, there are all kinds of other things that will probably need to be addressed as well in the coming weeks. So that kind of remains to be seen how that's going to play out. But with that, I'll end it there and then open it up to any questions.
Awesome. Thanks, Jennings. So we do have quite a few questions. I'm going to try and get through these pretty quick so we try and get as many done as possible. So let me start with some that we had gotten early on. So quickly, going back to the individual checks that people are going to be starting to receive. Someone had asked if that was technically an advance on next year's taxes, or if that is just a relief check that's separate from everything else.
It's just a relief check, separate. Yeah. And
Yeah,
you won't have to pay tax on it as well.
Great. One of the questions too had to do with those who have current SBA loans, 7A loans, EIDL loans. there was information that came out this past week that those that have current SBA loans, that there is a 6-month, I believe it's a 6-month deferral, or that they're going to pretty much almost forgive. Do you have a little more information about that?
I don't. I'll have to look into that.
Okay.
Okay, we can get back to you.
We'll find out more about that. Another question has to do with those who are self-employed or independent contractors. So they're able to apply, my understanding is they're able to apply for the PPP, but not until tomorrow.
Right.
And we're still even looking for some more guidance on how that's going to roll out. Is that true?
Yep. Exactly right. Yeah. And I just checked before I joined this meeting, and nothing's come out of Treasury.
Yeah.
So
Chances are it'll be at 10:30 again tonight. So just like last week.
yeah.
So, and I know that there had been a few different questions regarding some of the local banks. I know that Temecula Valley Chamber has a list. I know we have a list. I think it's on our Facebooks or on our website. So kind of check those, that we have different lists of what banks are locally offering them. For those of you, I would encourage you, make sure that you are first checking with your current business bank. Most of the banks that we have talked to that are offering the PPP are dealing with their original customers first, and then some of them are allowing the rest to get in line behind that. So I think that's where part of that fear is too, is if the money's going to run out or not. So check that out. I think there was we know that independent contractors can apply, but not until tomorrow, and we're going to find out what those are kind of going to happen and what the deal is there. Let's see. So there's a question that Gloria put, is, are healthcare workers exempt? And I'm not sure exactly exempt from what she was asking for, but maybe she can kind of clear, or let's see, she put something else here. For the FMLA related to COVID-19, are healthcare official offices exempt in less than 50 employees?
I haven't seen anything on healthcare workers specifically. And then the less than 50 employees, you know, there was guidance on that a little bit, and pretty much the guidance just stated that business should kind of detail why this would threaten the viability of their business, and kind of keep as accurate records as possible on that. They don't have to submit anything necessarily to IRS or to Treasury. There's no requirement for them to do that, but they should simply have that information on file just for auditing purposes. But
okay,
that's what I've seen for small businesses, but nothing related to healthcare.
Okay. Someone had asked that, so the additional $600 a week in the unemployment benefits, does that apply to part-time workers or just full-time workers? Or is that kind of done on a pro rata basis?
I believe that applies to part-time and full-time. I can double check. I don't think that there was any kind of stipulation one way or the other.
And I believe from what I've seen, I think that that's exactly what I've seen as well. Yeah. I know that we had a question regarding that on one of our meetings in the last week, and we talked a little bit about it this morning on our coffee Zoom, that the $600, it does actually apply to those who are independent contractors or self-employed if they apply for unemployment. The challenge is that the federal government still hasn't gotten that information relayed to EDD here in California. So EDD is still trying to figure out how that is going to get into the hands of all those individuals. So they're still figuring that out. I know that's a shocker to everyone, but just wanted to make sure you all knew that. Let's see, if you get approved for PPP and will still need capital, should you take advantage of the EIDL? Would mainly be using the emergency loan to cover rent as we recover from closure, knowing once we open again, it will take a while before customers are spending again. And I think that sounds like that's exactly what the idea of this is.
Right. Yeah. Yeah. I mean, why not? I would recommend looking at both and doing the numbers. And if most of your expenses are going to be rent related, and not necessarily related to payroll, then absolutely look at the EIDL loan. And you could even do both if that makes sense. But the EIDL loan, I think, will make a lot of sense for some folks.
Yeah, and I've talked to quite a few businesses that are looking at the EIDL loan that even if they're in a good position right now, business wise, it's a great opportunity for them. I mean, it's very relatively cheap money. So I know a lot who are taking advantage of that just to grow their business once the doors do open. So
right, and it's key. It's a 30-year term too, so
yeah.
I mean, that's very helpful. I mean, because there's been concern the PPP is 2 years. So
Right.
if you have a large amount that wasn't forgiven, only 2 years is not a whole lot of time to pay that
True.
off.
Yeah. So there's one question in this, you may not know this because it's more on the HR side. Can employers request documentation of COVID related sick leave requested from the employee?
That's a good question. I have to look into that. That's not the first time I've heard that come up, but I just can't remember what the most accurate answer is. So let me look into that for you.
Okay. So let's see if there's any more here. Let's see. Do payments made to independent contractors you employ count towards the average payroll for PPP?
No, it's not. Yeah, and that's because independent contractors themselves can apply for the PPP loan. So
Great.
that's fine.
Great. Let me see if I have any other ones in here. We have one of our members that did say they spoke to SBA today and basically reiterated exactly what you said, that it's taken about 3 weeks and that the 10,000 advance is not happening until you get that email. So,
Okay.
and I'm still waiting for our email too, by the way.
Let me know too if you get it.
Yeah, I'll let you know.
It's been a trouble for chambers.
Yeah. So regarding PPP, can an S Corp company that pays 5 to 7 independent contractors use the average monthly commissions? We kind of covered that and said no, independent contractors, they enroll by themselves. So
yeah, exactly.
So let's see, our bank, Citizens Bank, who granted us our SBA loan 5 years ago, has told us that we are covered for 6 months by the Fed. We do not have to pay back. So that kind of is one of those things that we had talked about. So we'll get more clarification on that too, but I think that's the case.
Patrick,
Yes.
just real quick, and talking to our local banks on the SBA and loan issues, not only just the existing 7A loan, people that have loans under that program that get a 6 month of their payments paid by the federal government, but if you apply for a new 7A loan, you actually get the first 6 months paid for you too. So it is a very powerful tool for our business community to use, especially in bridging these critical times. But the thing that everybody needs to understand from the banking standpoint is be prepared. When those windows open up, have your EIN number, have at least, at minimum, your 2019 financials available to you, if not your 2019 tax return, not required for your tax return, but certainly your financials, and have all those documents in front of you, because that's the things that they're going to require. And they're going to also ask for your Form 941, which is your employee taxes report of what you've submitted in the last quarter to justify, obviously, the payroll number that you're putting in your application. So get those documents ready. When you sit down at the keyboard, you can really fly through it in 5 to 7 minutes. I mean, it's a very, very, very simple form that you go through, but you just need everything prepared in order to accomplish that task.
Yeah. So I know one question that came up, this is actually more for me for clarification than you might be able to, because every webinar and every call I've been on the EIDL program, the 10,000 advance was considered a grant for those. But I had heard yesterday on my call that 10,000 advance now though is actually based on, it's $1,000 per employee that you have up to 10,000. Have you heard that? Because that was the first I had heard of it yesterday on a call with the SBDC, and I wanted to see if we could get, if you had any clarification on that or not.
I have heard that as well. Yes.
Okay.
So it's been kind of unclear on the SBA side how they're doing this, but I've also heard the same thing.
Okay. All right. So that's good to kind of know, and at least people can kind of figure that out too, or keep that in the back of your mind. So, and then I know that someone had asked about help with local property management issues, which really is not covered in this. I know that we're involved with a coalition that's working with ICSC, which is the International Council of Shopping Centers, that has a lot of work going on in DC having to do with the Phase 4 bill right now, where our hope is that there will be a lot more help in that regard coming down, because we know that that trickle down effect is going to be very difficult over the next 6 months or so. So especially when we know that like 30%, I think it is that have not paid their March or April rents. And so that's a staggering number when you think about that on the commercial side. So, and somebody said, can you clarify that the grant portion of the PPP is only 2.5 months of the total wages? I think the clarification is the opposite. It's the grant part's the 2 month, basically 2 months, 8 weeks, correct?
Yep, exactly. So that's what's eligible to be forgiven. And then the maximum loan amount that you can get, though, is 2.5 months of payroll.
Okay. I don't really see too much else for questions. Let's see. Let me check it one more time. We apply through SBA, not lender. Will they provide a lender? No. So someone has said we applied for PPP through SBA, not lender. Will they provide a lender?
No. So you'd have to go to your bank, whoever you have a lending relationship with or an account with. You start there.
Right. Okay. I think that's pretty much it for the questions. Tried to get to as many as we could. Again, I think anyone who's watching this, if you have other questions, if something comes up, please feel free to reach out to any one of us. Any one of us would be more than willing to help you, either connect you with the right people, answer the question for you, help you through the process, whatever that might be. Let's see. Regarding the EIDL loan, if the loan is greater than $25,000, what is considered general security interest?
Have to look into that. I know that there's the collateral. Of course, you'd need to provide collateral for a loan over the 25,000. But I'd have to look into the general security interest. Okay.
Great. And I know Brooke has set this up to record. So I think that we'll probably all have this, and we'll share this. We'll put this on our YouTube pages or whatever we're able to do, because that's not my forte. So I'll leave that to the people who know how to do that stuff. But I want to thank Emily for helping us set this up and get this all going, for Brooke kind of coordinating it all. Jennings, thank you so much for everything that you do. I know personally, I want to thank the U.S. Chamber immensely, because they have been an unbelievable resource these last couple of weeks. I think all of us have that 4-pager on our website and in all of our communications that we've sent out, because I do think it is the best piece that's out there to really help and explain exactly what the PPP program really is, and how to break it down and put it in layman's terms. So thank you very much for what you're doing and what you guys are doing. And again, reach out to us, use us as your resource, whatever we can do to help. Do not be afraid to ask a question. It's like they used to tell you in elementary school, there's no stupid questions, okay? We want to be able to be here to help you all. So thank you for joining us today. We appreciate it. Everyone, stay safe, stay sane, keep your distance, wash your hands, all that fun stuff. All right, everyone, have a great rest of your day.
Bye.
Thank you.
Bye-bye.
Thanks, everyone.
Thank you.